Welcome. In this video, we're going to be talking about support and resistance. And the different way you can find support and resistance and all of that. And, we're going to be going through them one after the other. Before we proceed, I want you guys to take a pause this video with a disclaimer. This video is not financial advice. It's only for educational and entertainment purpose only. Any actions taken by the viewers are their own responsibility. And if you're ready, let's move on. How to identify support and resistance. Identifying support and resistance, right? We can identify support and resistance by the following. One, historic price action, horizontal levels, trend line, Fibonacci, fixed range volume profile, and VWAPs. These are tools that we can use to identify support and resistance. In this video, we're going to be talking about historic price action. Using historic price levels to identify support and resistance. We're just going to do it video by video. In this particular video, I'm going to be talking about historic price action. Now, historic price action is one of the simplest ways to identify support and resistance. We look for a point in chart where price has reversed multiple times in the past. Tips. Here's a trick for beginners. Imagine a ball bouncing on the staircase. Where the ball bounced before on a particular step or edge, that's a key level. Like when the ball is bouncing on the staircase, where the ball bounces, those points the ball bounces are key levels. We pull up a chart, analyze areas where there is visible change direction several times. Those areas are likely support and resistance. Look left, see where price once reverse form on higher time frame. The level needs to have multiple touches, at least two, to be considered a strong level of support and resistance. For example, as you can see right here, let me zoom in so you can see. As you can see right here, there was a swing high here, another swing high here, forming a double top. Price rejected from that point. And we can highlight this point historically, whatever time this is, you can see the monthly, April, July, August, at some point in time, price rejected here, we can highlight this zone as a potential resistance. As you can see right here, there's a support where price bounces around here multiple times. This is a support where price once found support. Price rejected not once, not twice, but 3 times. And when price breaks it, we can say, okay, this can be support. It can flip to resistance. That used to be support is now resistance. This point that you highlighted at some point was a resistance that causes price to reject and sold off. Knowing that price has once rejected historically somewhere at a level on the price can give you a clear visual that, okay, this can be a support resistance. Price once rejected, the price can reject from there again. You can see right here, price found support here, not once, not twice, not 3 times. And when price rejects from this resistance, pull down to this support, hold the support, then move back up. These are historical levels what you can use to find support and resistance, right? You could go to your trading view charts. When you go to your trading view, under shapes, right, you can use this rectangle, to find or to find a rectangle and use it to draw your support and resistance level, right? Another example here, price once reject from this zone. There's a rejection here, on the 3rd time it acted as resistance, price found support right here and price moved down, found support for the 2nd time. On the 3rd time, you can say, okay, this will be support, right? And you can see it acted as support and price move up. historically, price is telling you price is found in demand right here. And, the story price action, we can also use the previous OHLC, OLHC, which means open, high, low, close, open, low, high, close. OHLC means open, high, low, and close of a candle. Our focus is to identify and mark the previous OHLC, which is open, high, low, and close of the previous candle on higher time frame, such as previous day, previous week, previous month. These levels are crucial. They represent market key decision point during a specific period. Like I said, previous day, previous month, previous week, previous year. The high, the low, the close, the open are key level, right, of a specific period, right? And this level act as natural support and resistance zones. Why? Because traders around the world are watching these levels. The previous week high, previous week close, previous week open, the equilibrium, which is the 50% from the high to the low, which is the equilibrium. These levels always act as natural support and resistance. From the beginning of the first week, you see the weeks begin here and the weeks end here. The new week begin here, went up, price went up, take out the previous week high, drops down. The previous week high is now holding us resistance. Price drop, previous week equilibrium, held as support, and price bounce up, right? And now price drop down, while the previous week low held as support. As you can see. Previous daily, the high, low, open and close, you can see how the previous day held a support and price bounced from there. It got to the previous daily high and, there was a small pause in price, held as resistance and price breaks it. Previous month, week and day, acts and helps, right? Tips and tricks. When you're trading this level, you always want to look for confluence. Do not trade these levels alone by itself. You can use other tools. Why I'm going to teach you other tools like Fibonacci, VWAP, fixed range. We also always want to use all of these tools in combination. We don't want to trade this alone. You don't want to trade these historic levels alone. Right? You want to also have other things telling you if you're going somewhere, you miss your direction, or you're trying to figure things out. You're asking people, I'm going to so place, I'm going to this place. Please point me to the direction. If one person tells you to go right and 5 people tells you to go left, for which of the direction are you going to follow? You're going to follow left because 5 people are pointing to the left side. This is why you don't also want to trade any of these tools alone. You always want to look for confluence. This levels tells us where market has struggled and succeed before. Historic price levels, levels previous month, previous week, previous days, right? If today price approach previous daily high or low and get rejected, it's a potential reversal signal. Same applies to the monthly and the weekly. A breakout above the previous day high or low indicates a strong momentum. Always wait for confirmation. But always wait for confirmation like a retest or with a confluence. Never use daily, previous monthly, previous daily levels as stop loss placements. Always use market structure as placement. Use the previous high and low to define the range. The EQ, the midpoint of the previous daily, previous week, previous month range, tend to be strong support and resistance. These are the acts and L's you can derive from these levels. Always follow me on social, on X, formerly known as Twitter, Big Back Tweet. I hope to see you guys on the next video.